Hi, I'm Ed Sakota. In response to numerous requests over the years to reveal the inner workings of my trend trading system, I hereby take great pleasure in presenting its essential elements for your financial edification. Joining me today are several members from the Northern Nevada Bluegrass Association. We gather to play benefits for local area hospitals. If you are currently in a clinic as a recovering marketaholic, or even if you have a mild case of marketitis, this tune might put you on the road to recovery. In any event, pull up a chair, lean into your monitor, and lend us an ear. We hope that you enjoy the show. You get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine. Now what do we do when we catch a trend, honey? What do we do when we catch a trend, baby? Oh, what do we do when we catch a trend? We ride that trend right to the end, honey trader, baby mine. So you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
Well, what do we do when we show a loss, honey? What do we do when we show a loss, babe? What do we do when we show a loss? We give that daggone loss a toss, honey, baby mine.
Well, you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
We make a lot of money and we sleep at night, honey, baby mine. So
you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, baby. You get a whipping, I'll get a saw. One good trend pays for 'em all, honey trader, baby mine.
Well, what do we do when the price breaks through, honey? What do we do when the price breaks through, baby? What do we do when the price breaks through? Our socks are in, so there's nothing to do, honey, baby mine.
So you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, baby. You get a whipping, I'll get a saw. One good trend pays for 'em all, honey trader, baby mine.
What do you do when the drawdown comes, honey? What do you do when it gets real big, babe? What do you do when it's even bigger? We stick to the plan and pull the trigger, honey trader, baby mine.
Well, you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine. What do we do with a hot news flash, honey? What do we do with a hot news flash, babe? What do we do with a hot news flash? We stash that flash right in the trash, honey trader, baby mine. So you get a whip and I'll get a saw, honey. You get a whip and I'll get a saw, baby. You get a whip and I'll get a saw. One good trend pays for them all, honey trader, baby mine. Good trend pays for them all, honey trader, baby mine.
Well, hello everyone. Welcome to the live stream, and thank you to Ed Seikota and the Bluegrass Band at the Trading Tribe. It's a classic song. I listen to it at least once a week. And if you remember those words and apply them to your trading, you should do a lot better in your risk management, at least. Perhaps not your technical analysis, but that's another story. Welcome to the stream, everyone. It's Sunday Night Live, as usual, every Sunday night this time. So schedule it in your diaries. Make sure to be here next time, next Sunday. But thank you for everyone that is here. I've typed up or sort of pointed out and typed up a few greetings already. I won't do everyone, but thank you very much for being here. I really appreciate it. So let's get going. It's about 1 minute to go. I just wanted to start early. Hope you enjoyed the Ed Seikota Band. One of the original Market Wizards, Ed Seikota, in the original Market Wizards book. And he's also in that song. So pretty cool. A lot of fun stuff. I'm going to switch my face away a little bit and go onto this sort of set of notes that I've got here. And we'll have a look through. So let me shrink myself, perhaps down into the corner, make these notes even bigger. And let's have a look. So what's going on? And if I can find the right page, let's just go through. These notes are just here for your sort of general guidance. I'm not going to go through every single note and every point, but I will put these notes up in the private group. So you'll have time to read them there for those of you who are sort of paying members of the private group. But let's go through it. My overall sort of thesis, let me just start this right at the beginning, is generally bullish for risk assets. Bullish for risk assets. So that's my overall thesis. I don't think it's going to be easy. I think it's going to be choppy. It's going to be messy. And it's going to be quite difficult trading between now and the end of the first quarter of next year. I think we're entering into what is potentially a blowout rally phase across the markets, including things like stocks, perhaps potentially even metals could go higher, things like crypto, and perhaps even some of the commodities, softs and grains, and things like natural gas and crude oil. So all of that is kind of waiting for a liquidity injection. And I think we're about to get that. So let's read through these notes very quickly. The opening framing of everything that's going on. Hope you can all hear me. I'm just reading the notes on the left-hand side here. Good song. Yeah, good song. Thank you so much. Good day to you, Keith and Ole. And I'll go through some of the other names later. So the overall tone in my perspective, and remember, this is my perspective. This is my thinking. There are people that think completely different to me and think that we're entering a bear market and that we're going to see much lower asset prices moving forward, at least in the next few months. But I don't think that's the case. I think we're likely to see much higher asset prices and potentially commodity prices. There are lots of reasons for that. But we are seeing this price behavior of 2 steps up, 1 step down. And that means rallies are confident. We're seeing good surges in the rallies, but fairly serious pullbacks on the pullbacks. But they seem to be controlled and relatively short-lived. And this is typical of a risk-on appetite in the market when we get constant new highs, excuse me, with pullbacks, indicating that we're climbing the sort of wall of worry, but lots of positive and bullish fervor behind it. So the pullbacks are controlled and short-lived. We've just seen a pullback on Friday across the markets, a pullback across everything, not just the stock markets, but gold, silver, cryptos, and some of the commodities, particularly the energies, as you know, on Friday. Natural gas, I'm speaking of in particularly. So it's not a euphoric atmosphere, just at least not yet. It may turn into that, but it's a risk on with discipline type of atmosphere. And so it requires us to provide quality in our trading, quality, timing, and structure. So that's what, if we can structure our trading properly with good entries, good technical sort of setups and pullbacks, good timing, and good risk control, we could take advantage of this very bullish market. Let's have a look at this point. Number one, the FOMC, the central gravity well, what's priced in? All right, well, we got the 25 basis point cut that was expected, was priced in. Markets briefly rallied and they came back the very next day, and they've come back a little bit further. What matters though is forward guidance. What is the Fed likely to do? We saw, I think, what was, some people say, a little bit mixed, but I think it was a dovish outlook provided by the Fed, with at least one more rate cut admitted or conceded by Jerome Powell next year, I think, and sort of reading in what he was saying. So yeah, more rate cuts, and I think there'll probably be more, as Jerome Powell is likely to not be making the next decisions going forward. There will be a new Fed chairman who's likely to want to drive, as Trump said, rates down to zero. I don't think we'll get that, because it's not just one person. It's a committee or a group that makes these decisions, but nevertheless, still looks pretty good. Further easing, language around further easing. And the bullish scenario is the cut, acknowledgement of slowing momentum, and supporting equities, credit, commodities, duration-sensitive assets. The bearish scenario, and we should consider both, is that the cut framed, the interest rate cut is being framed as insurance, or a sort of almost into a panic mode, pushback on future cuts. So we're not going to get 3 or 4, according to JP, maybe only 1, but he's not going to have the overall say in this. And then, yeah, so I'm not going to read further down. So there's 2 steps up, 1 step down structure, higher highs, shallow retracements, time corrections, and we can read on and on and on. And I'm going to scroll down to some of the other stuff that we might want to get a little bit more specific here. What about tech, crypto, Mag 7? I'm going to put those in the same basket for now. Nvidia, Tesla, Apple, etc., the emotional core of the market. And I think those are going to have a constant bid underneath them, at least for now. Pullbacks are being bought, but with caution. As I said, we're climbing a bit of a wall of worry at the moment. There are loads of things that are concerns for the markets, but loads of things that are positive. And I think the positives currently outweigh the negatives. Valuations respected again, of course, and then BTC bullish fractal. We'll speak about that when we get to the charts in about 5 minutes, I hope. Don't want to spend more than 5 more minutes on here. We'll get straight into the charts. And then a couple of other things. As I said, I will put this up in the private group so you can read all of this as you wish. And I'm hoping that everything is going quite nicely and that you can all hear me well. I don't see any panic in the chat. Please make sure to put your questions up. But before you do that, like and subscribe. Please just click the like button and click the subscribe button. It's free and it really helps the channel grow. And I'd really be appreciative of that if you would do that, please. Thank you very much. It would be absolutely awesome. Do it right now while we're talking. And at the same time, type up your questions just after you've liked and subscribed. Can I cover cocoa? Sure, I will cover cocoa. Ray? Sure. Let me just get through these notes very quickly. Just a couple of things I want to point out here. Copper, choppy, erratic, sharp rallies followed by abrupt pullbacks. What is Dr. Copper saying about the markets? When Dr. Copper pulls back, it often sort of portends or foreruns a bit of a problem in the market, or in other words, weakness in equities and other industries, potentially even crypto. So we don't want to see Dr. Copper selling off dramatically. I'm actually kind of bullish on copper. We'll look at the chart, but I'd like to see a bit of a pullback. Same with metals, really, overall. I think we can get a pullback. For the first time today, I heard from a different source, not me. I've been saying this for a long time, but the first time today, I heard from a well-respected analyst that I, occasionally observe and follow, but someone that I actually know personally as well. And for the first time, they said that gold could experience a 30% correction following this massive bull run. Maybe we're not quite at the top yet. We're pretty close, and that we should expect a 30% correction. That was what he said, not me, but I've been saying that for a few weeks now. So that's Dr. Copper. We're talking about metals in general. Copper is not confirming risk on, but it's not also warning of a recession. So I think so far, okay. And as long as copper doesn't totally collapse, it's not a warning sign. A little pullback every now and then is okay. Now, precious metals, silver's above $60, or it was a structural breakout, and gold is firm. Just spoken about those. I think they're both due a pullback. But if anything, I'd like to remain long on silver, but potentially short on gold. That's kind of the way we position at the moment. We'll talk about that in detail in about 3 minutes now. And of course, we've got lower rates supporting precious metals, inflation uncertainty, and hedging demand delay because of all the worries that are floating around the market amongst all the bullish possibilities that lie ahead of us. Natural gas, the storage levels are still above the 5-year average, but the cushion is shrinking. And I saw some forecasts today, early this morning. I'm going to have a look again before the markets open up later, that we may be, there might be some colder weather coming in fairly shortly. And therefore, we might see a bit of a bid under natural gas. Not only that, but I think we'll see a bit of a bid if these markets move in the way. I think there will, bit of a bid under commodities in general, including energy. And I've also noted that even though I'm still short on oil, WTI oil, it's pretty close to the $55 to $50 level where things are going to start getting pretty tricky for the shorts, and there'll be a lot of bid underneath oil. And so maybe it's time for oil to get a bit of a bid, natural gas at the same time, some of the other softs and grains, and then hopefully not cocoa and coffee. We'll talk about those in a minute. I've got a short on cocoa. And then and natural gas could benefit from that. So, but also because of potentially colder weather coming in, the market dropped off dramatically on Friday. We'll talk about that in some detail. And then risk appetite. So the final sort of analysis, risk appetite seems to be on, but it's tactical, and it's conditional. So it's not just willy-nilly and it's not euphoric, but it's tactical buying at the right moments. That's the kind of thing that we should be doing. And what actually works with this is pullback buying. So buying the dips. Don't buy the tops, buy the dips if you do believe that these markets are likely to move higher. Scale in. Don't put all your eggs in the first basket. Wait for the lower baskets to purchase further eggs at cheaper prices. Don't put them all in. Scale in gently. The private group members know all of this, of course, because we do this every day. And then hedging if you get into trouble or if you want to protect your position. This is what works in this sort of market. It's not a one-way directional market. There are big surges higher, and then the market pulls back. So we need to be, have a little bit of fancy footwork with all of this. And what fails is chasing these rallies, all in bets, as I said earlier, and emotional trading. I see there's a lot of emotional trading around today, not only because of natural gas, because generally the market sold off. Natural gas, crypto, stock markets, and other things all sold off at the same time. And when that happens, there's a general glumness that comes across the market, not just in the retail sector, but this glumness is everywhere. So it's it's not nice when the markets sell off across the board. And if you're trading different sectors, or you're using one sector to hedge against another, or if you've rotated out of one sector, maybe out of tech into staples or whatever, and they drop as well, and you think that was a safe play to protect the tech plays that you had on before, but they all drop simultaneously, the whole market gets a real glumness about it. Now let's go to the charts, and hopefully you don't have to look at me for too long, and I'll find the right screen. All right, here we go. All right, so as usual, I think I'll start from the left to the right, and just go through these. I'm not happy with the way this is structured or laid out. All right, I'll leave it like that for the moment. Now, I want to go through these from left to right. I'm going to start with currencies, but we'll get into the things that are troubling you, mostly, I presume, which are metals, natural gas, perhaps oil, and cryptos. So stock markets maybe as well, because they did drop off quite sharply on Friday. But I imagine that natural gas, cryptos, and metals are the things that people are most concerned about. I will get to those. But the first thing I want to do is to go through what's happening with the dollar, because whatever the dollar does sort of informs everything else that we do. And you can see that on Friday, the dollar formed an inside day after forming 2 bearish days and breaking down through key support, only to get down to, well, pretty close to this previous swing low and the key 98.2 level, or 90.2, pretty key support levels. It is possible that the dollar could get a bid here and come back up to the black line, the breakout level, the breakdown level, or even the 50 and the 200 and the 20 period moving average confluence, which is up there. And that would look something like this. If the dollar does tick up, we could see assets and other things begin to continue to move down. And so really, ideally, we would like to see the dollar moving down. It's possible we could tick up there and then move down up to that confluence or the black line above us at about 98.8, or perhaps even up to 99.10, something, 99.20 or 30, something like that. just under the 100,000 and the moving averages that we broke down through. So if the dollar does move down, and remember, we've got an inside day here yesterday or Friday. Let's get rid of that arrow. That's just to indicate that we may bounce. But we had an inside day on Friday, which is a continuation candle pattern, which means that the dollar is more likely to carry on moving down based on the candle patterns. Based on the technical structure, we're pretty close to the relatively recent swing low, and we haven't retested properly that breakdown level, the black line. So it's possible we could bounce around a little bit within this sort of range underneath the black line and above Friday's low for a few days, and then begin to carry on moving down, or move up, as I said, into that confluence and then down. But I think overall, the dollar index is on its route, or en route, down to the bottom of this very large megaphone. Let's put this into a weekly perspective to make it easier to see. And there you can see a very large, massive megaphone formed on this overall weekly chart going back to 2022. And we've got to the top several times. We've got to the bottom sort of once, really, twice maybe, but not the third time. So I think most likely is that we'll get down to the bottom of the megaphone, and then the dollar will come all the way back up to about 100, which is the parity level. The bottom of the megaphone is about 94. We're currently trading at 98. So another 4% down for the dollar, and that could push all the assets up. And it could actually be, if the dollar does slump down dramatically, the start of the next rally that we're all looking for on stocks, Bitcoin, and potentially metals if you're long on metals. So very interesting. Dollar does look like it wants to move down, but it might hesitate for a while. And that means everything that we're trading might just be stuck early in the beginning of the week, Monday, Tuesday, and maybe get going on Wednesday. And we've got jobs data coming out next week as well. And it's the week before Christmas. Is it? Yeah, sort of the week before the Christmas week. And so a lot of positions squaring off will be going on. A lot of people will be looking for rallies, late year Christmas rallies, hedge fund managers looking to get paid their bonuses. And when we look at the stock markets, the primary thing that they'll be looking to buy, and perhaps cryptos and metals as well towards the end of the year, is what we've got here. Now, this is the NASDAQ. We've only dipped down to this 20-period and 50-period moving average confluence. We didn't move up high. The S&P actually pipped the all-time high. NASDAQ significantly below it. So tech stocks have been lagging the S&P. And we did, as I pointed out on the video on Friday for members, we did have this hanging man candle. And I said the NASDAQ was likely to move down yesterday. Friday. It did move down on Friday, got down to the bottom here, and just to that moving average confluence, and not quite down to the next support level or the 618 fib, but pretty close. Not 618, 78.6% fib. So it's actually the reverse fib of the other way around. Doesn't really matter. It's a support level nevertheless. And we didn't quite get there, but came close. What I could do is actually get rid of this Fibonacci and draw one from the proper one, the real one, from the bottom to the top, and see how far we've come back. And you can see we did come back exactly 38%. Now, if that holds right here, it would be incredibly bullish for the NASDAQ. A 38% retracement hold is really bullish. Often you'll see the market retraces down to the 50% level or the 618. Notice that the 618 is here where this 100-period moving average is rising up underneath. That's a potential target too. Generally, as long as we're above this swing low at 23,650-ish, as long as we're above there, I'm going to remain bullish and long in mind on the NASDAQ. Doesn't mean I'm going to be long all the time, but I'll be seeking to get long whenever I take a trade. And I might get short occasionally, but most of the time it'll be long. And so we've got a new long position that I entered on Friday, right at that moving average confluence. We got down a little lower, we bounced back up and closed quite weak. I wouldn't be surprised if we gap down a little bit by sort of early tomorrow in the Asian session, and then bounce out of that gap and maybe make a piercing pattern reversal back into this candle. So a lower low, and then closing more than halfway up. That would take us till Wednesday or Thursday, maybe on Thursday when we get the jobs data. So interesting. But I did the same on the S&P, and I added another tranche at the drop down basically at the low on Friday. Not quite the low, but pretty close to it, at the support level, basically. And notice we didn't get down to the moving averages here. And notice that we had actually on Thursday did fractionally, I think, make a new all-time high by a fraction of a penny and then collapse back down. We didn't have a hanging man candle there, more of a bullish candle compared to what we saw on the NASDAQ. that was definitely a hanging man reversal. And I cautioned all of our traders in the private group and here on YouTube, actually, if you're a private YouTube member, you will have received the video on Friday where I cautioned this hanging man candle was likely, or a good possibility that we would see an attempt to move down. Well, not only did we have an attempt, we gapped down. We left a little gap, which probably needs to be filled, but we gapped down and kept going. So quite a strong move down. But as I said, it's this 2-step up, 1 step down, climbing the wall of worry, not explosive, not exponential, not euphoric, not willy-nilly, just 1 step up or 2 steps up, 1 step down. So I'm bullish. I bought some more right at the bottom on NASDAQ on Friday, same on the S&P. I haven't added more to the German 30 because we got positions from miles below down here at the red line. That's where we got long on the last tranche that we bought, close to 23,000, just at 23,000, I think. We're trading at 24.2 now. So, we've got a whole 1,025 on that trade, which is excellent. So let's hope these keep moving up. And now that I've added additional positions to the NASDAQ and the S&P to go along with the German 30, these are still not big positions on the NASDAQ and the S&P, not as big as what we've got on the German 30, but I will add if we can when they start moving up. Whilst we're on this page, as a trade alert, if you wish, if you're into trading this name, I'm going to be buying this at the open on Friday, on Monday. Keep on mixing Mondays and Fridays. Circle. Go and check it out. A lot of hype when this went IPO'd. Massive hype. We went from $64 all the way up to just $298. Call it just shy of $300. 60 up to 300, and then we've come all the way back down to 60. Broke up above the 220 period moving average on the day chart here. We've come back down to that ledge, bounce out of it. I could draw a horizontal line across there. We may have to test the 20 once more, just a little bit lower, just below us, the green line, or we might just hold here. So I'm going to buy at this level if we can, but if by the time the market's open on Monday, we might have gapped down to the 20 period moving average, or even fractionally lower down to this level at about 76.30, and we're currently at 83.05. So somewhere between 83 and 75, I'll be seeking to buy Circle. I'm also long on MSTR, Tesla, Coinbase, Nvidia, and I'm just bullish on all of these. I could be completely wrong, but I've got a very good feeling that these will move up in the next weeks and months into next year. And generally, I think 2026 could be a very positive year for many, many assets. And I know that conflicts with the ideas that others have. Some you will know who are pretty famous here on YouTube and who are calling for a top, calling for a bear market, calling for a recession, calling for these markets to collapse in the face of increased liquidity, QT ending, QE beginning in all but name, massive momentum piling into the crypto markets from corporates and so on. Lots of liquidity floating around looking for a home. We've got the year-end expectations from hedge funds to try and end, not that they haven't ended it with a profit, it's been a good year. They might be taking profit. There's going to be a lot of moving around, but I think we all want this year to finish positively. I think it's going to, or at least an indication of this beginning to move up. Now let's look at Bitcoin. I'm going to quickly I'm not going to go through all the other cryptos because I want to get to some of the questions. Now I've taken the lines off here. I want to show you one really important thing. This squiggly green line here, and again, I put this up in the members group, I think either on Twitter, X, or in the members group, I can't remember, late last week. But in 2020, I'm going to scroll back to that level there quite quickly and just show you where it comes from. In 2020, late 2020, we had this section over here where the market broke out of what looks something very, very similar to what we've got. A potential bear flag after a drop, faffing around, moving up to the top of the bear flag. After moving along the bottom, we got to, we're kind of like that where we are currently trading at the moment, at the bottom of the bear flag, underneath these moving averages and trying to bounce out. And I copied that pattern from 2020 and I stuck it on the end where we are currently trading in 2025 and just drew it into the current pattern that we've got going on, which is also a very similar potential bear flag. Before we analyze the comparisons, I want to show you that we're now probing the bottom of this bear flag. It was always likely to do that after the weekend or over the weekend because we are holding this red line without sort of retesting maybe for the last time this this ledge or this potential bear flag bottom. Now in 2020, we have a very similar pattern held to an almost identical bear flag. And then instead of breaking down as you would think it would, as a bear flag, move down, bear flag, break down, and the breakdown would be equivalent from the high down to the bottom of the bear flag, tagged onto the end of it. And that would, mean a long way down for Bitcoin, 127 down to 80, another $45,000 down from the top of this flag. And that would be, down to into the 60s, 65, 55, something like that. But in 2020, we had a very similar pattern. And instead of falling through, it tried it like 3 or 4 days in a row, ever increasingly smaller candles, and then suddenly surged up with one candle, consolidated for a little bit above there, and then moved on. Now, that's not the top. In 2020, I'll go back there just to show you what happened after that. And I said in my post on X, you all know what happened next. Maybe you don't, but this is what happened next in 2020. Let's have a quick look. Let's go back to where we were, the same flag pattern. I don't know if that's the one now. I don't want to be... I think it's this one here. No, I can't remember. Yeah, there it is. Same flag pattern that we're looking at, that we currently got a very, very similar shape. Also, after having made an all-time high, this one took a little bit quicker to get down. Ours has taken longer. But look what happened. We got to the top of the flag, and then boom, this was the start of the 2020 rally that took us all the way from 10,000 up to 43,000. All right, 4x from that little tiny potential bear flag. Well, we're right back there now. Tiny potential bear flag after a sell-off, and potentially a big move like we saw in 2020. Now, I'm not saying it's going to happen. We're probing the bottom of the flag right now. And if this doesn't happen, doesn't hold, we will nullify this whole scenario, and this will come crashing down through the bottom like it did. Like it did not in 2020. Instead of doing that, it rallied up. So a couple of notes here. The flag is formed above a prior breakout structure. So there's the prior breakout structure. The flag's formed above it, which is positive. So it may not be as negative as it looks. The 20 SMA remains ordered and it's rising. That's this green line that's come down and it's now curling up. Admittedly today, Admittedly today, it's sort of flattening off a bit because we've dropped down. Look how we're trying to bounce off that channel. I'm going to go to the 1 hour chart. Have a look at that. Look how we are reacting to that bear flag channel. Every man and his dog is watching the same line, and therefore, and expecting it to break, by the way. So everyone is expecting this bear flag to resolve to the downside. I'm going to go out on a limb and say I'm expecting this to resolve to the upside like it did in 2020, and that's my expectation. If we break down and close below that bear flag today, and it's really just today, maybe tomorrow we'll have a chance. Maybe we'll bounce up today, form a few more sideways candles like we did in 2020. Let's go back to that chart. And then, there they are, 1 more, 2 more, 3 more, 4 more. And then we made a new local high. Maybe that's what we're going to do. But if we move down through this line today and close beneath it, it's all over. And this pattern is no longer valid. Or that fractal will probably not be repeated unless we get a fake break and a massive drop down and then a move back up again. So that's all I want to say about crypto, because all the rest will follow. And we have positions on, you'll know what they are in the private group. And I've also highlighted them in all the videos that you might have watched over the last number of days. So that's that. Now, I'm going to go to natural gas right now, because I want to put you out of your misery. And then I'm going to circle back to metals. And there will be some of you who will be going, I wanted to hear about the metals right now, not natural gas. But I think for those of you who are trading natural gas, there's probably a lot more of you worried about your natural gas trade because of the violence of the move. And so we'll have a look at that. I'm first of all going to open up the futures chart here at FXCM where I've been trading. I'm going to switch back to Black Bull because I had some problems with a liquidity provider, which are now resolved. So they're offering the contract again. In the meantime, the last couple of weeks, I've just been trading. Identical price to the Henry Hub, identical charts. The only difference on here is that when we gap down, like that big gap on Sunday, that big black candle on the 4-hour chart here, that's not a gap. That's not a candle, it's a gap. It doesn't show on FXCM as a gap. It just shows as a candle. So bear in mind, I'm going to put a little, let's put a little note there just to make sure that we remember that was a gap, not a gap, a gap. Let's make this a little smaller and not green. Okay, so remember that was a little gap, and it may need to be filled again. In fact, if we look at the chart over here, this is the spot price at Pepperstone, and you can see the gap is actually shown on the chart there. All right, there it is there, Nat Gas. This is the ETF at Pepperstone. You can see the gap. That gap is not a rollover gap. It's a, you know, that was a Friday to a Monday. It was a weekend gap, but there was nothing else strange about it. It was just a simple weekend gap. I thought there might have been something odd about it, but not. Okay, let's go back to the futures chart. Slightly different pricing there, but I just wanted to point that out to you, that that gap is shown on other charts. So here's our situation. We were short, as you'll know. All of these red tranches, we had a large short position. We hedged it over here. And when we gapped up, we unhedged. We did a little bit of hedging around here. We ended up short on natural gas from about, I don't know, it was about $5 round, I think, maybe 5.05. And we hedged that entire position at 475. I'm going to use round numbers because I'm not sure of the precise numbers, but you can see the levels on the chart. I'm going to just use the average, the sort of rough numbers for now. So we got short at $5 and locked that profit in at this level at the trend line. Now, it's just a short little trend line. It's also where the 100-period moving average was coming up underneath. That's black line over here. And so it was a decent support level after shoving down into that level with what you would think was a price magnet surge. And normally with that, you would get a rapid bounce out. We didn't get a bounce out. And so we left the hedge on. We moved down. We came down to the 200-period moving average. I put another long position on there at $4.40. I'm going to just use rough numbers now because I don't know the precise numbers. And that then moved up. It got to, you know, I wanted to take profit on the close before the weekend, before the FOMC, the data came out on Friday. I wanted to take profit. I had my TP about 1 or 2 pennies above where we got to. I think 2 pennies, 471. We got to 469, something like that. We missed it. And by the time we closed on Friday, by the time we sort of had the chance to relook at it, it was also a 1 up, 1 down candle, by the way, which is also a reversal pattern. It had every chance of breaking up through there, through that moving average and trend line and that moving average cluster. It was just too strong. And instead of doing that, we fell down through the 200, on the second attempt, sliced through it like butter. And we came down to the next level where I've now added another long tranche. So I've now used up quite a lot of the profit that I got from these short positions by buying up the long trades on the dips, thinking that this market will move up. I do think that natural gas is likely to move to trade higher rather than lower in the coming weeks, months, and potentially even years. And what I mean by that is from instead of a $2 to $3 range, I think we would be in something like a $3.50, 75, something like that, maybe as low as $3 potentially, but something like $3.50, $3.75 up to about $5 to $5.50, $5.75. So a $2 range above $3.50, whereas before we were in the $2 range below $2.50 for the last couple of years. We've moved into the higher range. So I think that somewhere around, and we may not even get that low, and that's why I've been buying at these levels over here. But if we don't hold here, I will hedge the entire lot once again, and then we have a very serious potential of moving all the way down to 375 or 350, much lower down here. And I would hazard a guess that 375 would be the right level. So we've got to get through $4. I think the next stop is 375. Natural gas likes to trade the 25. So we'll go with, the 50s, the 25s, the rounds, the halves, the quarters, the rounds. Natural gas likes them. Also, if we do fail here at $4, I expect we'll go to 375, which is also the point of control over a decade-long chart on natural gas. Very important level. And so this level here right now, we've fallen down through, but let's zoom in. What happened on Friday, the last 2 candles, you can see a little bit supportive. And in fact, the penultimate candle on Friday, this one here, is actually, believe it or not, a piercing pattern. And what a piercing pattern is, we have a very bearish candle breaking down through support. The next candle breaks down, makes a lower low, and then closes more than halfway up through the dark body of the previous candle. This is a Friday close. on the 4-hour chart. And so this is a reversal pattern, these two candles put together. And the next candle that we closed with on Friday did not make a lower low. In fact, we made a higher low than the previous one, not a higher high, but a higher low. So this might be a reversal pattern. However, notice that we've just broken down through the trend, through horizontal line where we got long, retested it from underneath, came back down, retested it from underneath again, and closed lower than the retest. So in the micro analysis of this, this is a little bit bearish, and this could keep moving down. It's not looking particularly good. And the very first thing that I will do in a few hours' time, about 5 hours' time, is I'll be looking at this, deciding what to do. If we bounce out and we might gap up, if there is cold weather, and the weather reports that come in late in the next few hours will influence this. If we have cold weather reports or we have a swing into a colder direction, we could see a gap up. If we don't see that, we could see no gap. And if we see sudden balmy weather everywhere, this could gap down. I think that's unlikely, though, considering the time of the year. Excuse me for drinking Red Bull, but when one talks for a long time at some pace, one's throat gets a little dry. So what are we going to do on natural gas? So I can't remember what my average price is here, but it's probably somewhere around about 425 or 430. I'm not exactly sure. Maybe at this green arrow here at the 200 period moving average, that's at about 440. I can't remember precisely. I don't have a full size position on this. And I did take some size off during this hedging process over here, reduced by about 30%. And so we're back down to a smaller size we had been, and then I've added some of that back on. Remember, we got a good profit from these shorts. And even though it was scary with that massive surge up and the gap down, we managed to hold on by fancy hedging at this level and protecting our position and re-establishing the shorts, unhedging, in other words, on the way down. But we started getting out prematurely. It's interesting, though, because it's come down very fast. We look at the stochastic on the 4-hour chart or an RSI. Let's do that. I know everyone likes oscillators, so I'll put it on for you. I'm not an oscillator fan myself. And so you can see how oversold we are. And in fact, this is a 4-hour chart. Look at this. More oversold, in fact, on the RSI than we've been since July this year. And then before that, about May this year, at the bottom of these relatively short moves down. Look how massive this move down has been. Very, very unusual. And the length of it, sometimes we do this, we move down in April from 420 all the way down to 280. So 320, $1.40. But that took a while, that took April all the way into, well, about a month. And this one, that was $1.20, moved down from 550 down to 420, another $1.20 basically. But that only took about, a few days. So a day or two or three. So very dramatic move down, incredibly oversold. And if we look at this on the day chart, I would hazard a guess that we're approaching a pretty oversold level. If we do open up at this level here today, later on today, this will probably immediately enter oversold territory. So let's have a look at the day chart. There's that big horizontal level that I was talking about in the private group. Key support, very, very key support at 425, between 425 and $4. And then below that, we've got the 375 level right in the center here where the market structure break is, that green, you can barely see it. And then if we have to get below that, we've got $3 right at the bottom of this range. Notice how the $3 base has held for a long time. And it may be that if we have to get hedged and move down, that we could go all the way back down to $3 and then try and bounce out of there. However, for now, just going back to the 4-hour chart, and let's get rid of the stochastic RSI. Just going back to the 4-hour chart, you will notice that this, as I said, is a potential, not very excitingly potential, and we're below the horizontal, which is not good. And we've sold off a lot, and there's a lot of downward momentum. But there is potential that this piercing pattern candle reversal setup will hold and it will bust up. I think a gap up today would solidify that. If we just gapped up above that line, maybe up to about 430, maybe a 10-cent gap up, 10, 12 cents, just to get us above all this noise here and we could be up and away. It's all going to depend on what the weather looks like going forward. But as we erode the storage surplus, there'll be less and less inclination for natural gas to move down. At the same time, I'm also short on WTI. As I said at the beginning of the stream, it's likely that as we get lower and lower towards the double bottom here at about $55, I think we'll get through there eventually down to 50 and then potentially down to 48, something like that. I think it's just going to get more difficult. It's been a steady, constant, continuous move down over multiple years, and all the way from 100 and some change, it's been one-way traffic all the way down. Occasional blips up, but a zigzag all the way down. We don't have an uptrend. We have an overall downtrend with constantly lower highs. We haven't had a higher high we haven't had a higher high since June 2022. That's true. And so the moment we make a higher high, and we're looking at these major peaks here, not the intra stuff, but even we look at the intra-day or intra-month stuff, we don't even have a higher here. We don't even have a higher here. That's very difficult to say, surprisingly. Not even here. So the moment we start getting higher highs, we'll start to reconsider. But for now, we're moving down, and I'm short from the red arrow, looking for a target of 55, 50, and then 48. It's going to be more difficult and more choppy and more messy. Now, I want to talk about, we will come back to some of these, and I will talk more about natural gas and oil and some of the other things that we've been talking about. Remember, we talked about natural gas potentially spiking. What were we talking about? Natural gas. I can't remember now. Anyway, the spike down and then bounce up scenario is something that we might face on many of these instruments, including the NASDAQ, the S&P, even Bitcoin, and some of these other altcoins, Ethereum, XRP. We might just have a spike down or a gap down and a gap up this weekend and set us up on the bullish momentum. Just going back to Bitcoin while we're talking about it, it's still holding this level, and it's going to try, I guarantee that. There's too many people looking at this line and too many people that will have contrarian ideas. Look at the 4-hour chart. The last 2 days, this whole weekend, we've barely moved at all on the 4-hour chart. And then suddenly 4 hours, well, it's not more than 4 hours ago now, 8 hours ago, we plunged down, hit that bear flag bottom, bounced up sharply, try it again, bounce up sharply, and we're trying again now, and we're resting right on top of it. Super interesting. And if we don't hold that level, I will be hedging 20% at a time, a few $1,000s apart until we fully hedged on Bitcoin. I'm not risking this moving down to 65 or 55 or something like that and trying to wrangle leverage positions through a massive drawdown. It's not my sort of favorite thing to do, so I won't be doing it. Now, metals. We must talk about metals. Big sell-off on Friday across the board, really, on gold, on silver, on copper, and on platinum. This is palladium, but platinum also sold off. So gold, I heard, as I said, for the first time today from a well-respected analyst who is someone that I know personally, and also someone that you will probably have heard of or know about or have watched or read about sometimes. And for the first time, this particular person, I don't want to mention who it is, said that they expect, I wouldn't say expect, they are allowing for now a 30% correction in gold and angling down back down to either the red trend line at about 3,800, 30% down from where we are currently. Let's just draw that in. Let's take it from the high. So with a measuring tool, would take us down, 25% would take us down to the top of the triangle. Believe it or not, that's only 25, that's actually only 20% from the all-time high down to that triangle breakout is only 21.5%. And 30% is a little bit further down, much further than you'd expect, and than I would expect, actually, to be honest, is all the way down here at about $3,000, and we're now at 3,400-ish. So could we get from 4,300 down to $3,000, a 30% correction? Some people now are saying this is possible. I think that's a little bit harsh, and I think we could get something more like a correction down to this red trend line. And if we drop down there in the coming days and weeks, that would be about a 10% correction, and that's almost nothing. So yeah, I think gold is going to be a short, if not now. It may have to make a new all-time high. I don't know. but we have a big spike high, the third in a row, 1, 2, 3, and looking to move down. And we got through the 78.6% fib, but we didn't get to the all-time high. I added some more shorts on at the high yesterday, right at the top. And at the same time, we are long on silver and have been long ever since $50. And we've been trading this all the way up to the current price, still long, and looking to get either hedged or get out of this. And I don't know. I don't know what's going to happen. Now, you might say, well, what is gold going to do? Is it going to move down today, next week, next month, next year? I don't know. It might move down before Christmas. I have no clue. But whatever gold does is likely to drag silver along with it at a different rate. Silver has been trading more aggressively than gold, much stronger rallies, but also much stronger pullbacks. And so if gold pulls back, silver might pull back faster, and we'd need to get out of our long trade and take profit on that. But we are short on gold. So it's a kind of a hedge, and they work very well together. And most of the time, in fact, every single time, we've made profit on gold and silver being in opposite directions. Even though gold has dribbled up slowly, silver has raced higher. Now, copper, as I was saying earlier in the stream, Dr. Copper, fibs on natural gas. All right, we'll come back to that, Vishesh. Sure. Let me just finish off with this. Copper, as I said earlier in the beginning, we don't want Dr. Copper to fall off dramatically and collapse like it has done before. There's the tariff collapse. That Trump was talking about tariffs on copper. There was another collapse over here. I can't remember. I think that was the some other sell-off. There were lots of sell-offs going on. I can't remember them all. Various Trump-related sell-offs. Another one over there. We don't want this to go on. We don't want copper to crash. We've done very well on copper. I actually don't mind too much at the moment because we don't have massive positions on stock markets. But generally, if copper keeps moving up and does quite well and is quite stable, it's a good sign for equities. So we don't want to see these massive sell-offs. And I'd like to get long on copper. I tried to get long on Friday, and excuse me. Oh, excuse me. Whoa, oh, hell of a sneeze. I tried to get long on Friday, and I have an order, and still there actually at 5.29, and we got to 5.30. In fact, my trigger warning, you can see I got an alert there. Didn't even trigger. It didn't even get to 5.30, maybe a penny above that or half a penny. So I wanted to get long on copper there. On that, just simply, breakout, pull back to the breakout point, and off we go to follow path A. But we didn't get it. Now, if we move down, we may have to follow path B, and I'll move that along. I'll move this along too. And so this is kind of what we're looking for on copper. Either the higher path, which I favor, not only because I'd like to buy copper and get long, we could get up to $6 on copper, but also because it favors the equity markets and Bitcoin, everything else moving up. But if we do have to move down, I'll be looking for the red line below us to get long nevertheless, and that would be the long-term trend line coming up from underneath down here at point B, just around about that point. So I don't know how this is going to play out, but I'm going to try and buy at 5.29 if we get down there. And if we don't get down there, I might have to try and buy a breakout through the top or just buy willy-nilly. It's not really my style, but sometimes I do live on the riskier side of things if I feel so inclined. Now, and then silver. We talked about silver and gold. So I'm still long on silver, short on gold. At some stage, we'll have to rearrange and readjust that. And then I have nothing on. A few folks in the private group want to trade platinum or palladium. It's not really my thing. Palladium might be, doing a sort of loop-to-loop cup and handle with a higher handle than the cups type thing, moving up higher. I don't know. Palladium's used mostly in catalytic converters in cars, and whether there'll be any ICE cars around in 10 years, I don't know. I really don't know. And whether, I suppose there will be, but is there going to be demand for palladium going forward? And is there another use for it that I don't know about? I'm sure there are loads of uses for it, but not as much as used in catalytic converters. All right, and I think that's it really. I said I want to buy some Circle on the break, on the pullback down there. Stocks, I want to, we got new positions long on Friday on NASDAQ and S&P. I want to buy some Circle tomorrow at the market open. Bitcoin, we're looking to see if it holds this line. If it doesn't, I'll get hedged. Potential for this to move down much, much lower. It's a very precarious structure, this, folks. Don't be holding your long Bitcoin if you in risk, in danger of damaging your account to a serious extent if this moves down from here, down through, down through the flag, down through the low at about 80,000. We could get down to 80,000, make a double bottom. That's another possibility. Not a good one. None of them are good unless we bounce out of here, but a move down to there and back up again is a possibility. Not a good one. We don't want it moving down. I'll be fully hedged by the time we get down there. So I don't want to be hedged anymore. I want to be unhedged. I don't want to be long, and I want to be making money like everyone else. And Bitcoin is just so frustrating at the moment. It doesn't mean I don't have as firm a belief in it as I always have done. It's just annoying at the moment. All right, folks, that's it. It's been quite a long diatribe for me and a long monologue. I'll try and get to some of the questions very quickly. We've still got 15 minutes, 12 minutes. So there's a little bit of time left, which is cool. And let me just go through. I'll start saying hello. Good day, Ole and Keith and Emil. I'm not going to go through everyone. I know it's nice to be greeted. I occasionally attend Trader TV Live, which is a stock trading show. I have it on in the background. I've been a member there for 100 years, and I occasionally attend that. But and they know me pretty well there. But every time they give me a shout out in the chat, I get all sort of happy. It's an interesting thing. Cocoa, let's go to cocoa. We haven't covered softs and grains, so let's go to that, and then I'll carry on. So let's quickly switch over to cocoa chart, and actually maybe I need to. Yeah. So where is it? Cocoa. All right. So cocoa. I don't have a position on cocoa, but I would like to get short on cocoa at some point. Now, we're trading within a downward sloping channel of sorts, not the best channel, but we've come from a very high level and a very blown out, manipulated, and terribly frightening trading period for cocoa traders because of the massive volatility. Even if you put this on log scale, which you shouldn't have to on a commodity like cocoa, even on a log scale, it's out of control. But we have a head and shoulders here, and we've broken down, but we have not retested from underneath. So it's a pretty nice and neat pattern. It's easier seen on the, as you can see on the logarithmic chart, and it's not a perfect head and shoulders, but sort of a left. We could actually draw that in. Why not? Head and shoulders somewhere on here, and I can never find what I'm looking for. Not that. Yeah, head and shoulders. So something like that, and you got to find a place to take off from, but something like this. And yeah, I don't know, a bit skew and weird, but something like that. Okay, so head and shoulders, and that would move back down to about here, and we're currently trading up there. So something like that. I don't really like it very much, actually, to be honest. I'm going to get rid of it, but it is head and shoulder-ish, and we're moving down in this channel. We broke down through the bottom. We're moving back into the channel now. I want to get rid of this skinny line here too. So my feeling is that we've now broken back in here. We've got to this blue line, not into the Moab level, with the Moab, mother of all breaks, the orange line. And I think we've got to get up there, actually, looking at it now. We got up to the blue previous swing high over here. Not quite. We haven't even quite got there yet. So I think we could at least get there. And that's at 6,650. But notice that this breakout level, which is the break neckline level of the head and shoulders, is also, and it's also a double bottom, but it's also a gap. There's a gap right across that band, almost precisely. And that gap has not been revisited yet. So I think the most realistic expectation is to get back to the top of the gap and the top of the Moab level, but that would be above the channel center line, which is this dotted blue line here. If we get above the channel center line, there's a danger of going all the way back up to the channel top. So my thinking is I'd like to try and, I don't think this path's right. Actually, now that I've thought about it a little bit more, I'd like to try and get short on cocoa at the top of the gap, having closed the gap at about 7,280 or 7,300. And I won't put my full position on there. I'll put a starter position, but I will allow for this to move up. Having now at that level, if we do get that high, having gone through the channel center line, there's every danger that we could move up either to that red line or the channel top itself before moving down, simply because we will be above the center line, and that would be a bullish thing. But I do think we've got to take out that gap and this horizontal orange line, and that would mean that we get to at least 7,300 to 7,300 and 7,400, call it. So something like that, 7,380, 7,3 to 7,4 to sell at the top of that gap. But allow for a move up to the top of the channel, because as I said, if we do move above the channel center line, there's a good chance that that bullish momentum will take us to the channel top. And technically, traders will be looking for that. So that's cocoa. I hope that was useful. So I don't have position. I'll be looking to get short on cocoa if we can. If we can. I'm not sure if we will be able to, but we'll try. All right. So interested in entering a short silver. I don't think it's a good idea to sell silver, JY. If you want to, you can, but it's not my best guess. I think silver could go a lot higher. I wouldn't be selling it now. And I'll be following gold to decide what to do with silver. Gold is moving down. It could pull silver down with it, but I'm not convinced gold's moving down, and that this little spike high on the gold chart, that's going to hold. I'm not convinced. And that's why I still have my long silver position on. I really don't know. We'll find out this week as we lead into the end of the year and as we see all of this news and talk about liquidity and the Fed and the markets and interest rates and year end and all sorts of weird stuff's going to come out across the board, where it's got to do with geopolitics, economics. You're going to find a lot of stuff, interesting stuff. So yeah, I wouldn't be doing that, getting short. Hello, Martin. Nice to see you, mate. Always. Amit, lovely to see you, mate. I'm glad you're back. And please make sure to come every week, Amit. And we also have a midweek on a Wednesday. We have a stream every single Wednesday. Love to see you there. It's me and Crypto Paul. We're talking about the markets, but also cryptos. And we benefit from Crypto Paul's expertise. CZ, Alternative, reposted this stream. I don't know what that means, but thank you for reposting it. I appreciate that. Tito, nice to see you. And Tomas, haven't seen you for a while, I don't think. Hey, Emily. And previous trend line that nat gas could potentially bounce off. Yes, Brandon, you're quite right. There is a trend line right there on nat gas that we could bounce off, which I didn't draw in, but you're quite right. Let's quickly put that in there. And it comes from quite a long way back. Wrong chart. Let's have a look at this chart. I'm not sure if it was that trend line, but there is a longer term trend line. Let's go to the day chart. I'm not sure if I'm able to draw it, but I'm not sure. Don't think I can find it, actually. Maybe it wasn't on the day chart, but I did notice it in the private group. Someone put up that trend line and we could bounce. Just talking about natural gas. Let's just go back to this, folks. If you've been holding this trade all the way down here, if you've been buying against this downtrend, I've been buying, but I've been hedging and I've been short for at least half of the way down before buying. And then when I was wrong, I hedged my position. I haven't hedged the last positions, these two, because I don't need to just yet. But if I have to, I will. But if you've been holding long positions from, let's say, $5 or $5.10 or $4.98, and you've held those positions and added to them all the way down to here, apart from one little blip where we got long at the bottom there at that green arrow, and we tried to get out ahead of the weekend, but we couldn't because it didn't quite get, we could have, I suppose, but we just didn't get to my target. But apart from that one little blip, we've not had any reason to get long, and rather any reason to stay long. And if you've stayed long, it was a bad mistake, and you should not have done it. You should have hedged. You should have taken smaller positions. You should have not been buying at a particular level if you got the levels wrong. You should not be holding on to losing positions for too long. You should not be oversizing your trades. You should not be getting into a panic mode when things go wrong and making poor decisions. I bet amongst the bunch of you here, most of you or many of you will have done at least 2 or 3 of those things during this move down on natural gas. It never gave once the indication that it was safe to remain long or to go long or to add size or anything like that. Look at all of these black candles. We've only had amongst this whole period, I don't know how many candles it is. It might be 30 on this 4-hour chart. It might be 25 or 30. Amongst it, we've only had one bullish candle with a higher high. One single candle. This one here, where I got long. the only candle with a higher high amongst this whole move down. If we look at this on the day chart, as many, many candles. Look at this on the day chart. Here's a glimmer of hope. We've had 1, 2, 3, 4, 5 days down. Even though that third day down was a white candle, bullish candle, not bullish. It's a white candle. It closed higher than it opened, but it's not a bullish candle because it's got a lower high and a lower low compared to the previous day, and it closed underneath the 20-period moving average. It's a bear candle. So 1, 2, 3, 4, 5 bear candles. It's the time when you start looking, particularly on natural gas, for a reversal. 5 candles, 7 candles, 9 candles. You rarely, almost never get more than 9 bearish days in a row on natural gas. I can't remember the last time it happened. So it's either 7 or it's 5. And we've got 5 already. And maybe the next candle will be a bullish day. I don't know. But it's certainly an important level. There's the 50-day moving average here on natural gas on the futures. This is the front month at FXCM, trading the Henry Hub front month price. So that's natural gas, folks. I hope I've given you some, at least direction, if not solace, in your difficult trades, because as I've said, there's every danger that this could keep moving down and that you may be in more peril. My advice for you is if you have positions on and you're about to lose your account or take a massive loss, try to hedge your positions, try to reduce size, at least take a smaller loss and keep some size on if you'd like to risk a smaller portion of your position. But, protect your account, protect your capital. This is not a game. This is something that we do. Yes, it's fun and it's enjoyable. It's what I do. I mean, it's the favorite thing that I can think of doing. I like trading more than almost everything else, but it's also very serious and it's money. And although money is not everything, and if you've lost some money, it's not the end of the world. It's not the end of your life. There are people that love you, I hope, people that care about you. And if you're healthy and strong and have the abilities, it's not the end of the world. You can always restart, but do it properly next time. Don't do the same thing because many people do the same thing over and over again. All right, now let me carry on. All right, so Martin, looking at previous trend line, I couldn't find that trend line, mate, but I did notice that we spoke about it in the private group. Carry trade unwind. Yeah, so good point. Carry trade unwind. Is the yen going to suddenly start getting stronger as we see money flowing out of assets back into the yen and into the yen treasuries and markets and assets or not? As the carry trade unwind continues, because the dollar is getting less attractive compared to the Japanese yen, the Japanese might raise their interest rates further and the US might drop interest rates further, meaning that the carry trade, the differential between the two countries' interest rates, is what traders were using to make money. So they would borrow Japanese yen in essence, and using yen, Japanese assets and money, finance, borrowed at almost zero interest or even at zero or less over the last number of years, below zero, and buying US stuff, Bitcoin, gold, silver, stocks, MSTR, Nvidia, you name it, all bought with money borrowed from the Japanese. Now, that carry trade, that money is not cheap anymore. It's not as cheap as it was. And so if we're not getting good yields on these assets that have been bought, that money will flow back into the Japanese yen. And what that means is that this chart will move down. I'm short on this chart. I'm hoping for it to move down, but I don't want a massive carry trade unwind, because when this starts moving down and when we do get these unwinds, like we've seen at these two big red arrows, and there have been more, there's another one before that, these are all carry trade unwinds. And the end result of that is not only does the yen get stronger because money flows out of US and other countries' assets back into the yen, but those assets experience a massive decline as well. And so if we see this sort of thing happening, we'll see the assets in, risk assets, basically, mostly coming off, particularly risk assets. And so that's the carry trade unwind. We don't want to see this moving down helter-skelter, but we do want to see it moving down because it's too expensive and it's putting pressure on all sorts of different markets being at these very high levels, and not only the Japanese market. And so they need a stronger yen to curb inflation, one of their big problems. Even though it's pretty low by Japanese standards, it's astronomically high at about 3.5%. The Japanese people don't like inflation. That's for sure. All right, so that's that. Carry trade. Let's see. We want it to unwind, but gradually and peacefully. Fib inputs on natural gas. Sorry, I didn't get to that. Yeah, I don't know what fib input. I think we did do the fib inputs, actually. I did draw the fibs, I think, but let's have a quick look. So where have we come back to? This is the day chart. Let's put a fib in. I think it's about halfway, but I don't always draw my fibs in because I can kind of eyeball it. Yeah, so about halfway, precisely halfway. Not quite, actually. We could go a little bit further, but we touched it. We touched exactly halfway. It's not a Fibonacci number, but it's the 50% retracement of the move from the bottom up to the top, and we've pipped it at 50% of the way back again. Very good level to buy at from a Fibonacci perspective, but it's also where the 100, let me restart, but it's also where the 50-day moving average is, 50-period simple moving average right here at the 50% retracement level after 5 days down, and 5 days down on natural gas often is the sign or it's too many days. The 6 days is often a day up. Even if it's not a very bullish day, it probably won't be a very down day, put it that way. But you never know. I don't know. These are not, I don't make predictions. I just don't know what the market's going to do the next day. And when I wake up tomorrow, I won't know what the market's going to do the next day. And I wake up the next day, I don't know what the market's going to do the next day, and so on. I just don't know. What's going to cause the sell-off in gold? Just a pullback, a technical pullback, Jazz. Gold, it's not going to keep on going up forever. Markets don't keep going in one direction forever. They've got to come back. And profit taking has got to happen. And, people are got to buy more at cheaper prices if they can. Profit taking on RCT or rotation. Rotation as well, of course. So, gold's very expensive right now. I wouldn't want to be buying gold at this price, certainly not. But would I want to be holding gold at this price? Do I think there's a lot more upside, or could I swing my gold profits, which we have now, significant? Could I swing those gold profits into MSTR or into Bitcoin or into natural gas or into oil stocks or something like that, or into Bitcoin miners or into Circle? Circle is a great one. I would definitely take some of my gold profits and put that into Circle. In fact, I'm going to do that. So I'm going to take some profits out of my gold trades or use the profits that I've made to buy other stuff. I don't trade zinc, Kiran, and I don't trade aluminum or aluminium. So I could give you some views on those, but they wouldn't be of any value or worth. Who the heck are you? Stop spamming. What? I don't know what you're talking about. Don't worry about the Nightbot chastising you, Kiran, but I don't know who you're talking about, your evil twin. I'm not sure. Maybe a new long on silver futures. No, I would not, Ganesh, not at this price. Way too expensive. Wait for it to come back. Great stuff. Thank you, Will. I appreciate that, mate. Natural gas created a bull trap for the current monthly expiry. Might dance around or slightly above the current price. Sure, Car. Do you think gold is still coupled to the dollar? Sometimes it is, sometimes it isn't. Sometimes everything rallies together, gold and the dollar. Sometimes the dollar goes one way, gold the other way. Most of the time, but not always. Thank you very much, Vishesh. Appreciate it, mate. And that's it. Folks, we're 6 minutes over time. That's okay. I don't mind that. Been a lot of folks here, a lot of questions. I don't think I've got to every single question, but I hope I've got to at least most of them. And so it's been wonderful having you all here. Please make sure to join us on Wednesday in the next live stream, where I'll be on stream with Crypto Paul. We'll be talking about all of this stuff, updating midweek. You can join us there and say to me, James, but you said this on Sunday Night Live, and now it's doing this. What the hell are you talking about? Come and ask me on Wednesday in the live stream. I'll defend myself, or at least attempt to. So come and join us Wednesday live stream, and then there are videos every single day this week. I'd love to see you at the live stream, but please make sure to subscribe, like, and watch the videos. Help support the channel. There's a lot more coming in 2026 on this channel, and we're getting our own app, ArcisFX app for trading, private group, and all sorts of other stuff that we'll be offering members. So very excited about next year. But please just come along and join. Make sure that you're subscribed to all the stuff so you know about it. And I think that's it, unless there are any further questions. Thank you, Will. I appreciate your grand applause on my departure and exit, and I send the same back to all of you. If you survived natural gas this week, well done. I know it's been tough, but please, please, and I've been contacted by email by about 8 people asking about natural gas and asking about Bitcoin and asking about metals. Some of them with very large positions on that they were not sure about what to do with. Some of them in pretty precarious positions with lots of money. And they've contacted me to ask me about what's going on. My advice to them is I cannot give advice. I cannot tell you what you should do with your positions, with your money, with your risk, with your marriage and your car and your mortgage. I cannot get involved in that. I may want to occasionally for some people that I really like, but I still don't do that because it's not my job to give you financial advice. And in fact, and indeed, I'm not authorized to do so in many countries, so I won't do it. But if you join the private group, you can see what I am personally doing myself with my trades, and you can adjust your trades accordingly and adjust your strategy according to what you see me doing and the others. And there are lots and lots of people, hundreds of people in there who are willing to help you and tell you what they're doing, and some really good traders in the private group. So come and join us. It's not expensive, and I'm not going to say it again because I don't like advertising too much. So it's Nightbot. We got to turn Nightbot up, Will. Don't worry about it. Thank you so much, Umcar. I appreciate that, mate. Everyone have a wonderful Sunday night. For those who are in the private group, I will be in the private group the moment the market opens, and we'll tackle the natural gas opening together. So make sure you're there if you have a natural gas trade on. If you're not in the private group, you know what to do. Website links below. If you've got a big position on, spend $100. Make sure that you save your money and get back on track. Otherwise, you're going to be, doomed to doing this over and over again. Yeah, so that's it, folks. It's been really, really nice to talk to you. It's Sunday night. I appreciate you being here and late on. Well, it's not late, but during family time, really. And I appreciate your spending that time with me. Take care. I'll see you next time.